May profits be upon you. Welcome to another weekly market forecast. We're going to go over the S&P, the NASDAQ, the Dow, gold, and silver. Okay, let's take a look at the news coming up next week. These are important events. Red folder news means that it may have some good, it will add some good liquidity and movement and energy to the markets, which allows us to make good trades. All right, when there's no energy or liquidity in the markets, like Monday, there's no red folders. The markets tend to range. All right, kind of like what happened Friday, where it just had a small range. It was not a good day. It was a sluggish day on Friday, last Friday. So Tuesday, Monday we skip. Tuesday, you could trade that day, but those aren't high probability trades, in my opinion, without good liquidity to trade with. All right, we got CPI, high impact news. That's coming on Tuesday. So be prepared for that. I tend to wait until the news and before I get into a trade. All right. Prior to the news, this kind of high impact news, core CPI, a very telling data. What do you call it? Inflation indicator. All right. This allows the Fed to make better informed decisions when it comes to the interest rate here in the U.S. So wait until the news and then fade whatever the move is. That's what I do. Anyway, that's just a suggestion. Wednesday we have some unemployment news for the Aussie dollar, and on Thursday more volatility. We have core PPI and this PPI here. Listen, the difference between the two is core PPI is doesn't contain data for energy or food when it comes to producer price index. All right, this one does. All right, it lets us know, hey, was there an increase in the burden on producers that'll shift that burden price wise, all right, profit wise to consumers and raise prices. You understand? All right. So, and then we have the Fed chair speaking at 10 minutes later. Friday, we have some consumer sentiment. That'll be some good liquidity. So Tuesday, Thursday, Friday, yeah, really, really good days coming ahead, in my opinion. Now, let's look at the S&P. We can see that we're still in this uptrend. All right, higher high, higher low, higher high, higher low. Even though I love the way the, the market responded here with a down and up. I mean, this is a very quick turn. This is a wick of respect as price came into this area of fair value. All right. Once price return to that, you wait there to take those buys. I didn't take that buy. All right. I took some buys within, but I didn't take this buy. And this is an area of demand, and price just took off. And I think that's going to carry into the week ahead. Now, I want you to take a closer look at something. All right. Look at this. That is a weekly bearish fair value gap. Price is getting ready to run into that. It's going to be the draw on liquidity, because what we did was we took all of these lows out here, 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 here. The market took those lows out or swept all of that liquidity and bounced up, right? I think we're going to see, first of all, let me just point out that's an external range liquidity, those lows. What does price like to do? Go from external range liquidity to internal range liquidity, and that would be this monthly fair value gap. All right, we haven't tapped that monthly fair value gap just yet, but I believe that's where price is being drawn to. And if we go to the weekly, you can see there's also a weekly fair value gap. I will draw it out within the monthly fair value gap there. All right. Let's see. I don't know what just happened there. That was weird. All right. Monthly fair value gap. All right. All right. So, but price has already used it with this wick. It used it to great effect. Once it tapped back into that weekly fair value gap, price dropped hard. All right. So this weekly fair value gap is used already. All right. We're going to eliminate the monthly as soon as it is used. Now, but you can see price is pushing up towards that. And I want you to note that there is a bullish fair value gap that was created along the way. All right, a bullish fair value gap. So price could use that bullish fair value gap. Why does it keep doing that, jumping? I don't know. All right, price could use that bullish fair value gap to tap into and continue higher, or it can continue higher from where it's currently at right now. But we took the previous weekly high this week, and prices closed well within the range of this candle. All right, and you see the wick of respect, and it's where the buyer stepped in. I do believe we may see some continuation to the upside. And I believe the monthly fair value gap is the draw. That's why I have these areas marked for targeting. I had those areas marked last week. You see, we kind of meandered with that. But what we did do last week was we did create a low of the week. We swept the previous lows, and this is where that bullish fair value gap is. On the weekly, this is the weekly fair value gap there, and I'm looking for price to possibly break through. Like I said, last Friday we had a sluggish week, very low range, whatever. But maybe we might see, even though it's an inside bar, it's inside the range of the previous candle. I'm looking for price to continue higher. Should we come back down and then go higher because we already swept that high? I don't know, but I like the fact that it pushed up, pulled back about 68%. This is an area that I would watch to see if price gains support. All right, gains support for a higher push up. If we go down to the 4-hour, you can see how price is having trouble getting past those lows here. After pushing higher, it came back down, but this low is still remaining. If price takes out this low, listen to me. If price takes out this low and closes below it, I would be looking for price to pull back and continue down. All right. But as long as this low is intact, I'm looking for buys. Got it? All right. If we go to the NASDAQ, I'm looking for the exact same kind of analysis. All right. Because they're shaped the same. If you look, this is S&P. This is the NASDAQ. Very much the same. So the same analysis applies. All right. Except we only have one target for liquidity, the buy side liquidity. I'm looking for price to continue higher up there. That's it. We pulled up, came back down about 68%. I'm looking for price to continue higher. It's no more complicated than that. All right, we do have a daily fair value gap that pushed price into this old fair value gap there, but we are now pushing. We probed above that the high of that fair value gap, that bearish fair value gap. It is used. We don't need it anymore. We still have the monthly to deal with, so that's what I'm waiting on. I'm waiting on that monthly, and we'll see if we can get any higher. Again, if price takes out this low and closes below that low, I'll be looking for price to pull back and continue down, all right, towards that low. But until that happens, I like this low. I like this low, and I think it's protected, and I think we there's a good chance we go up higher. We look at the Dow. The Dow is the weakest of the three, all right, and you can see that I have this area here. darkened. Why? Because if you go to the weekly, you can see that this area is, you can see the 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 sell down, right? Inside bar, price pops above that high and then drops hard. All right. I like this because you can see the volume imbalance here, right? And price uses those volume imbalances sometimes for speed bumps or to reject price. All right. And this was in an area where uh, you can expect price to find some resistance. And it created this area of supply, all right, from here to here. And this is the extreme of that supply where price pushed up and then down. I like that the buy up before a stronger sell off. All right, that's exactly here. And it created this area of fair value. All right, price traded back in towards it, didn't quite reach it, and then finally did. Now, this is a bullish move for me. When price took this high, it also creates a weekly fair value gap that price pushed into, and you see a two candle touch and go here, but it didn't. We didn't see the follow through. All right, price took the high it just created, and now we have this mess. This is all happening at this area of supply. You can see the volume imbalance here that again price rejected from, but it didn't see any real follow through. I think these are bullish indicators. With that, when you have failed indication to go lower, it's a pretty good indication that we're probably going higher more often than not. All right, so we can eliminate the weekly bearish fair value gap. Okay, we can eliminate this the volume imbalance here. You know, it's used. It's not something I would base a new trade off of either of those. We are in this area of supply, all right, but we are inching higher into it instead of following down from it. So I'm looking to see if price can hold this low, hold that low, or sweep it without closing beyond it and then continuing higher, because this is the weaker of the three. I'm still looking for higher prices, yes, but it may sweep the low first without closing below it and continue up higher. All right, if we go to gold, let's go to the monthly. Okay, why do I have that Fibonacci retracement stuff up there? Well, I'm going to show you something. All right. What we have here from this high to this low, all right, is a bullish fair value gap. All right. This is on the monthly. All right. Can the market use this bullish fair value gap? Not yet, because this candle hasn't closed yet. This candle has 19 days to close. So it could come all the way down here and mess up the whole thing. We can't count it as a fair value gap yet. But we have one forming is what I want to point out. All right. And if you go to the weekly, yeah, there's a thin bullish fair value gap here. And what did price do to it? It came down, touched it, all right, tapped it, and we have this bullish candle right after that. All right. It did its job. All right. It's eliminated now. All right. So when you have those eliminations and you see price come back to that area where that fair value gap was, it's coming towards the low that was created, the one where the tap happened in the first place. That's what's happening. And price could come back and take that low and then go back up as well. All right. It's not rejecting from that old fair value gap. It's rejecting from the low because it took external range liquidity and now it's seeking internal range liquidity. You understand? All right. Actually, I'm sorry I said that backwards, because this was a fair value gap down here. All right. It's taking internal range liquidity. It already took that internal range liquidity, bounced up. It took that low. Now it becomes a liquidity point, what do you call it, a sell side liquidity, all right, a swing low, all right, it takes that swing low, and it could reject up from there, all right. So let's see what happens here. Okay, if we go to the weekly, to the daily, let's talk about a plan of action. You can see the the uh, the push higher here. This is an area of fair value. All right, price push back, and we waited for price to come back to it. Didn't quite reach here. Didn't quite reach here. Failed attempt to take out, make a new high here. Uh, and we have a pullback. I like the fact that we are pulling back into this bullish fair value gap. All right, it is a daily fair value gap that it pulled into. It's giving a bullish indication here. Why does that thing keep popping up? I don't know. All right, and I want to see some follow through. If price comes and takes out and closes below that low, then I know we're probably going to go back to this area of fair value so that the market can offer fair value, taking out this low as a liquidity point, a sell side liquidity point, and then maybe moving up higher. But I like higher prices right now in gold, with the tensions going on in with Ukraine and them coming to the table with Russia, also India and Pakistan. Ceasefire tentative. I'm not sure what's going on there because it's on and it's off. I'm not sure. So we have some tensions going on, and I think that might push prices higher here. All right. That's where I'm at here on gold. I think we're going to see higher prices, especially with this bullish fair value gap here finding support. We could push up from here. I had the what do you call it, the Fibonacci retracement because of this range, pushed up, pulled back to what, 618, where it intersects what, the bullish fair value gap. That's why I like this as a point of support. If we go to silver, silver is weaker. All right. If I'm going to take a metal and take a short, I'd rather take it in silver because it's weaker. All right. You can see how we had this strong push down, sweeping these lows for liquidity and this low. All right. We swept all of that. And now we're pushing up. Yes, we should be following gold up. There's tensions over across seas and all. I would like it to push up, but you see how it pushed down with this bearish candle here on the weekly. All right, that was 2 weeks ago. All right, and if we go to the daily, you can see that we were inside of this bearish weekly fair value gap. Price pushed up into it. We had a push down. It did its job. It did its job. All right, so we eliminate the bearish weekly fair value gap, and uh, uh, and you can see it's kind of becoming indecisive. Failed to take out the new high, make a new high. It didn't take out the old high. We're moving kind of sideways. I don't like this market more than I like gold. To short. If I'm going to short, I'd wait until I see a sweep of the market to the left here. I'd like to see the market move down lower, and then I'll take the pullback for lower prices. But until these lows are swept or eliminated through a break and close below these lows, all right, I'd still be in favor of the market moving higher. Let the market take out that high and pull back. I would love to take that to this high, and then we can start attacking these highs. I hope that makes sense. Uh, Thank you for watching. Make sure you hit the like button if you like what I'm putting down. If you're picking up what I'm putting down, then you hit that like button and you hit the subscribe button. All right. Also, I'm going to be putting out the FX market analysis for the week ahead. So uh, do check that out after you check out this video here. I'll leave a link in the comment section or in the description or on your screen. All right. And I will see you in the next video. Thank you again for watching.